In just a bit, but before that, it's 10 a.m. and we have to check out what's happening in the commodities space. Manisha Gupta joins us. Good morning again, Manisha.
Morning, Lata. Thank you so much for that. Well, let's start with the crude oil prices, where I've been telling you that this is a third straight week of gains is how we are beginning this week. So nearly 0.25% up in the international markets, and that's what we also are mirroring in the Indian markets here. Some bit of gains as we can see on the screens. Well, it really is about the US drilling activity, which has continued to decline. The rig count has been falling for 3 weeks now and now stands at a 2-month lows, and that has been supportive. And markets also are on the sidelines waiting for the OPEC and the allies output cuts to begin from 1st of Jan 2019. Of course, there are demand concerns from China and Europe, and that continues to put a lid on the prices. But apart from that, there is plenty happening in the international markets, which is supportive for the prices, and that's the reason you have seen gains. It also has to do with the IEA report, which says that if we do see the kind of supply disruptions from the OPEC members, voluntary and involuntary cuts that we are seeing from there, output cut from Canada, that is expected to actually lead to a deficit in the international markets by the second quarter of 2019. So that has been yet another statement which has been supportive for the crude oil prices. But with the dollar index trading at a 19-month high, there is pressure coming back in case of the precious metal prices. So you have seen the gold prices come off those 5-month lows that we were trading within in the previous week. And the silver prices are also off its 1-month highs in the international markets right now. The base metal prices also haven't had it so well. This is the weakest year that we are closing since 2012 in case of the metal prices, with the LME index down by 13% for 2018. Most of these metals are closing in the negative. Zinc, of course, has been the biggest decliner, down by 22% in this year. You also have seen the nickel prices down by 18%. Lead is down 25% as well. So not such a great year for the metal prices, especially with what's been brewing between US and China, the slowdown concerns. But it is the shrinkage in supplies in case of some of these metals which actually may see to some weightages being allotted by the hedge funds as we get into 2019. Zinc, of course, is trading on the higher side because you have seen the inventories decline to a decade lows. Buying calls then coming in from Smriti Commodities for today. It's a buy on crude, targets of 3,780. It's a buy continuing in case of the metal prices. Also for copper, 446 is the level they're watching out for.
All right, Manisha, thanks a lot for that. Well, let's move on. The buzz over the last few days has been that the Reserve Bank may look at relaxing the prompt corrective action framework. SS Mallikarjun Rao, the MD and CEO of Allahabad Bank, joins us now to talk about that. Mr. Rao, thanks so much for joining us. Can you start by telling us what your own expectation is? What do you think the roadmap could be for the bank by which it can come out of the PCA rules?
Yeah, good morning. So the roadmap is very clear for Allahabad Bank. The asset quality is the primary focus for us. Asset quality includes 2 points. One is that the recovery in NPA accounts as well as controlling the slippage. These are the two prime areas. In the last quarter, this Q3, after the declaration of Q2 results, we have been very much concentrating on this area. And the concentration includes outreach to the customer, that is reaching out to the customer. We have started a program called Village Contact Program and a Mohalla Contact Program, whereby we carry the list of our borrowers and our entire team goes there. We have also launched a program called Each One Reach One, exhorting all the employees of Allahabad Bank to at least reach out to one NPA borrower and one SMA borrower so that NPA gets recovered and upgraded and SMA doesn't get become NPA, the slippage is arrested. So the primary focus continues to be on recovery, asset quality, and simultaneously we are also looking at our strong area, that is CASA. If you see the results, you have seen for September, our CASA was around 47.02% domestic CASA, and we would like to reach anything between 48 to 50 by March. And we are concentrating on that, which would give an advantage of reducing the cost and deposits. Besides, we also have an advantage in the market of GSEC, which has given us a little advantage in provisions requirement. Otherwise, we have been carrying certain amount of legacy. Besides, in NPA as well, we have a legacy of provision required to be done. That is the reason why we are very clear that in the Q3 and Q4, whatever strain is there, we would like to come out of that. And we are expecting our bank to come to break even by June 2019. Okay. That is the overall outlook for Allahabad Bank.
Mr. Rao, two quick questions. The problem, of course, is NPA, but also in your case, capital, isn't it? Because the CET1 as well as the overall capital adequacy ratio is lower. CET1 ratio is 4.98 and capital adequacy
capital.
Yeah. So are you being promised any money?
Regarding the capital, if you remember, on 12th of November, we already received 3,024 crore capital from Government of India. As a result, by recasting that 3,024 crores, our position as of September for CET1 was 7.59, and the overall CRAR was 10.89. So if you look at, we have achieved, but the only position is we have to hold on to that position in Q3 and Q4 where we are not expected to get into the profit. So we have already put up to government our request. We are expecting some amount of capital from them. Besides, we are also trying to sell our non-core assets and real estate, which would fructify during Q4, whereupon we are expecting to get around 800 to 1,000 crores. So with this, we are confident that we would be able to achieve the capital adequacy ratio by March 2019.
What is the recovery target? Either for the quarter that is just ending, because that you know how much it will be.
If you see the recovery, if you see the recovery in Q2, we clocked only around 511 crores. But so far in this quarter Q3, we have already crossed more than 650, and we are expecting to reach around 800 crores. That is including recovery and upgradations, which would put control on the slippages. In Q2, we have increased around 3,111 crores, whereas in this quarter, it would be lesser than that, much lesser than that.
Okay. A final word on provisioning. As you pointed out, you had to complete the coverage ratio, but now it is not all that bad. It is 67.8 provision coverage ratio when you reported on September 30th.
Very true.
But you are also generating fresh NPAs. Your fresh NPAs rose by about 8%. I mean, gross NPAs. So how would provisioning go?
Correct. No, the expected provisioning in the next 2 quarters would be anything around 2,800 to 3,000 crores. The reason being, if you look at our NCLT advances, 131 cases are there, wherein the provision coverage ratio is 78%. So as a result, majority of the provision is there in NCLT accounts, and the additional provisioning required would be reduced successively. The impact will be there up to Q4.
Okay, all right, we'll leave it at that. Thank you so much for joining us and giving us your views on the PCA norms and the fact that they expect the bank to break even by June of 2019. Let's see, they've seen huge amount of accumulated losses.
It looks like a very clear plan, of course. Up and away, 0.7 higher, but the mid-caps today are on a slower gear. Let's see how things pan out. The first hour has clearly gone to the big boys. But there will be big boys on stage today. There are live visuals that we are just going to play out for you, coming in from Jaipur's Albert Hall ground. In moments from now, Ashok Gehlot will take oath as the Rajasthan Chief Minister. Also, Sachin Pilot will take oath as Deputy Chief Minister. So, okay, all we have are some visuals coming in. That hall is pretty full now.
Okay, well...
All right. Well, we'll keep coming back to, of course, this theme and play it for you through the day. But as we get to wrap up the year, let's take a look back at the year through the lens of various sectors. We kick it off with banking. Abhishek Kothari is here to rewind the year for us. Abhishek, how did the banking stocks do?
It was a Swach BFSI abhiyaan in 2018. So 2018 was a year of Swachhata and Parivartan in the banking and finance sector with focus on asset quality, management, NBFC valuations and the consolidation. But after a very turbulent year 2018, 2019 promises to be a better year following the Nirav Modi scam. RBI had decided to crack whip on the asset quality and barred restructuring of loans, as a result of which the banks reported their worst ever quarterly loss of more than 55,000 crore in the Jan to March quarter, with gross NPAs rising to over 10 lakh crore and sequentially rising by 16% on a quarter-on-quarter basis. The September earning, however, the big cleanup was over and the losses have fallen sharply. So if you look at the 55,000 crore loss, that has come down to 3,731 crores. But the other big theme, beside focus on the asset quality, was the Swach Management Abhiyaan. Axis Bank saw the first change. Shikha Sharma's tenure, which was ending in June 2021, was cut down and Amitabh Chaudhary was being inducted. ICICI Bank also saw Chanda Kochar stepping down early amidst controversies over some loans given to Videocon Group, and Sandeep Bakshi actually took over the charge. Rana Kapoor at Yes Bank is also set to step down in Jan 2019 post RBI's direction to make way for a new MD and CEO. But perhaps the biggest change that we saw was at the central bank itself, with Urjit Patel resigning following a standoff with the government on several issues, and veteran bureaucrat, that is Shakti Kanta Das, taking charge as RBI's governor. 2018 also saw the NBFCs being in the spotlight for the risky practices that they undertook, which got them exposed. So after IL&FS defaulted on repayments, this caused a credit scare and saw liquidity drying up while bond yields actually rising. So shares of NBFCs saw a sharp correction in their valuation, which was about 30 to 50%, which led to a massive correction in their overall valuation. So NBFC sector also saw one of the marriages in the year, Capital First with IDFC Bank, which was the biggest marriage in the NBFC sector. We'll also see consolidation on the PSU banks in 2019 with Bank of Baroda, Dena Bank and Vijaya Bank set to merge by the end of March 2019. So after that, we'll be also seeing 2019 being a better year for the banking sector. We saw loan growth of 15%. That was on the back of 9% last year. However, if you look year to date in terms of absolute amount, the growth has been phenomenally on the higher side in FY18 as compared to the last year, the whole of last year. So NBFC picture, slowdown is expected in the HFC and commercial vehicle finance sector. However, gold and consumer sector will do well.
Okay, Abhishek, thanks a lot for that. That was a really good summary of all that took place in 2018. But we have Krishnan, ASV of SBI Cap Securities, who joins in now into our discussion. Krishnan, hi, good morning. Thanks for joining us. You know, give and take everything, it's still the quality private sector banks that delivered this year. And HDFC Bank is up 12%, and Axis Bank and ICICI Bank is up about 10 to 15%. Do you think that would be the case in 2019 as well?
Yeah, May, thanks. So, purely from an earnings perspective, as you rightly said, the retail-focused private sector banks have done exceedingly well during 2018. As Abhishek put it, we went through a fair amount of turmoil all through FY18, early FY19 as well, as far as corporate lenders are concerned. But a lot of that, especially for private sector corporate lenders, I think most of the asset impairment recognition is probably now behind us. We are probably at the tail end of impairment recognition as we speak. There is an element of power sector that probably still needs to be resolved. But beyond that, I don't see too many unknown variables now left that need to be recognized as impaired for the corporate lenders. So I would think earnings catalysts are beginning to pick up. And also remember, most of these other corporate lenders are also now piggy riding on retail. So, so you have an ICICI Bank, which is about 55% retail. You have an Axis Bank, which is about 45 to 50% retail. So very clearly, retail remains a very key earnings driver. But given that corporate headwinds remain for most of these lenders, I think those earnings catalysts will begin to play out for the Axis and ICICI this year.
Well, if I'm just looking at the year-to-date gains, and the biggest gains have come from Kotak Mahindra Bank, year-to-date 22% higher, RBL Bank 14% higher, and of course HDFC Bank 12% higher. ICICI and Axis have also done well. Now, we just had a big argument, a big point being made by the Credit Suisse that they are betting big on SBI and ICICI. A couple of days back, we also had a similar big number coming in from Morgan Stanley. So do you think 2019 calendar is going to be the big year of corporate banks, that instead of Kotak and RBL leading, you will find corporate lenders?
We have sensed that for some time. Obviously, it didn't quite play out during CY18, but we do believe that as earnings come through, because remember, all through FY18, early FY19, the earnings are still accruing to the large retail lenders. And as long as that remains, very clearly the valuation multiples also kept getting stacked up. It's important for the likes of Axis, ICICI, even State Bank of India to start delivering earnings and fairly consistently across the spectrum. And that's when probably you will see a fair amount of a rewind or a rebound towards these corporate lenders. So we have no doubts in our mind that the corporate lender re-rating is probably just about beginning right now. All of CY19 should see that strengthening further, yeah.
So what are your top picks in the sector now, and what are the target prices that you have ascribed from a long-term investor standpoint?
So we have Axis Bank, which remains a buy. We have a target of close to $800. We have ICICI Bank that also remains a buy. We may have to revisit the target price there. We like Federal Bank. I think there are many engines beginning to fire there. So we like Federal Bank. We have a target of about 120 there.
Okay. Yeah. Public sector banks?
We don't have any under coverage. Yeah, but we wouldn't speak about SBI. Yeah.
I know. Okay, but that I agree. But other public sector banks, you don't have a.
So I think what we have generally said is the number of investable PSU banks are fewer today, and Bob is undergoing a fair amount of transition. There'll be integration challenges there. So I think it's worth looking at. Definitely, it remains investable, but I think you will have to go through about 1 year of integration challenges there. So
NBFC actually was the big question. Which part will you still look worthy of buying? So we don't. So we wouldn't immediately be able to speak about NBFCs. But what we do like is the fact that growth is beginning to taper off for most of these NBFCs. NIMs will probably be a challenge for these next 6 months, September to March of 2019. But structurally, the credit worthiness has not yet been challenged, right? So to that extent, we don't see valuation multiples derating completely because of asset quality issues. Of course, to the extent that there has been a liquidity scare, a credit squeeze, etc., I think the valuation multiples have corrected, and that probably offers a fairly decent entry point into some of these stronger NBFCs like a Bajaj Finance, etc. Yeah.
All right, Krishnan, we've run out of time. Thank you so much for joining us, and thanks Abhishek as well. That was a rewind on the banking sector. We leave the markets fairly stable. Mid caps actually have come off from their highs.